What's going on, everybody? You know who it is. This is Austin, and this is the Austin Smith Real Estate Podcast, where we talk about real estate and we talk about lifestyle. Today's guest coming out from the west coast of California, here to talk to us today on what he's doing to take down deals in a much more expensive market. And I know some of the challenges that new investors face, as well as investors where their market has maybe increased in value significantly over the years and now can no longer participate in the same type of transaction because prices are a little bit more expensive. Today's guest breaks down what you can do to succeed in any market. So a little bit of housekeeping before we get started. If you haven't done so, be sure to log on to austinsmithrealestate.com/podcast and be sure to subscribe to the podcast on whichever platform you feel comfortable with. And if you have been able to receive some value by listening to the podcast, please log on to one of those platforms. Please leave me a rating and a review as we continue to share this message. So, ladies and gentlemen, without further ado, let's get into the show. What's going on, everybody? Today on the Austin Smith Real Estate Podcast, we have an awesome guest hailing out of California, but he invests in LA, so we'll get a chance to talk about that. He is a prominent real estate investor who obviously buys homes, buys apartment buildings. He's done it all. He's done 1,000+ deals over his career, and I'm pretty sure everything that he has in the pipeline now, that's just going to do nothing but add to the number. But got an awesome episode today for you. Ladies and gentlemen, I'd like to introduce you to Barrington Malcolm. Barry, thank you for taking the time to come on the show, brother.
You're very welcome. You're very welcome. Thank you for having me.
Absolutely, man. We'll dive right on into it. Just tell us how exactly you got started, just as a real estate investor over time. How'd you get started?
Man, I don't think this episode is long enough, but I'll try to give you the short version.
Do your thing.
I actually started real estate investing right out of high school. I started knocking on doors, foreclosures, notice of defaults. And I was one of those guys that learned the hard way how to buy property with the so-called no money down. So it's been so many years ago. I was 17 when I started real estate.
Now, what kind of mentality that you have to have, like as a 17-year-old, to really go out into the field and then trying to put deals together? I mean, we're talking about homes. I mean, some people aren't buying homes until, much later in life. Like, how at 17 did you find yourself trying to put deals together?
That's a good question. I was brought up with a single mom. She's foreign, Belizean, and we didn't have much growing up. So I had a desire to make money and to have money and to not be broke and to not always have to go without. So it started from a place of wanting and wanting more than what we had. So I was always pretty aggressive, that guy that would have 3 jobs, working after high school and things like that. So one thing led to another, and I saw something on TV about this lady that was African American, and she was successful in real estate, and that piqued my interest because I didn't have anyone in my family that knew anything about real estate or had any means at that time. So from that interest being piqued, I heard about a seminar that was going on at one of the local centers in LA. It was $75 to get into that seminar. And believe it or not, I did not have the $75 to pay the cover. So I snuck into the seminar. I literally snuck into that seminar. That's God's honest truth. And that's where it started. and that seminar talked about foreclosures and door knocking and things like that. So I took it and ran with it and learned the do's and the don'ts by trial and error.
Gotcha. So, what would you say was the turning point between you going to the seminar and now you doing deals in an expensive market? What was the turning point that you would consider helped you propel yourself into the future as far as your experience and, becoming successful?
I wish I could give you one magic aha moment, but it really was, my career is a result of consistency and being persistent, never stopping, continuing to evolve and continuing to learn. When I first started, it was not glamorous. It wasn't that what you see on TV and Instagram and social media now, where you're just getting paid and whatnot. Obviously, people just show the shine and they only show the wins, but they don't show the hard knocks that go through it. So there was not necessarily a turning point as much as there was just being persistent and never stopping. And I hate that I can't give you a definitive answer.
No, that's great info. Because it to your point, I mean, I quit my job to go into real estate full time, and the first year was tough. I made, I think it was $15,000, and that was on like my that was on my 1099. So then like taking my expenses from that, it was like 5,000 or whatever the case. And luckily, I just told myself I just need to get through the second year. If I get through the second year and I'm still here, the momentum will carry me. I'll be good. And lo and behold, got past the second year. Second year was a little bit better, but nothing game changing. And then, the bigger dominoes started to fall, and I started meeting the right contacts and the people that, can help me by allowing me to serve them essentially. So totally understand that. And now, thank God I'm nowhere near where I used to be at. But
yeah, that's beautiful.
To your point, it was just solid persistence. I mean, that was
yeah.
I would try to answer the question myself, and even with me thinking about it, I probably would have answered it the same way, because there's a couple of turning points, but that just comes from the day in and day out grind. Okay,
exactly.
Let's talk about, because you're investing out in LA, you're living out in California, and obviously LA is a more of an expensive market. And for me and my market over here in New Jersey, things are starting to get a little expensive, and we've enjoyed the opportunity and thought of buying property in cheaper places. However, that might not always be the case. Investing in the expensive market, would you suggest for somebody who maybe lived in LA or maybe lived in your neck of the woods, would you automatically suggest that they invest in their backyard even though it's more expensive, or would you have them go to a location where it's much cheaper but they may not be familiar with it?
My logic is invest where you are. I go against the grain when people think that a market is more expensive. Like, for example, in California, our average sales price, or in the market that I'm in, I'm dealing in properties that are $1 million plus. And then there's other people that are dealing in properties that are $80,000, $90,000. But my logic is it's really just another zero. It's the same deal. When I first started, I did a lot of deals in Compton and South Central, and this was 100 years ago. So houses back then were like 80,000, 90,000, and I was really comfortable doing those deals. Mm-hmm. And then I remember I wanted to venture out into the west side, Beverly Hills, West LA. On the west side of town, the properties jumped to 400,000-500,000. And a lot of my peers were like, man, you're going to get eaten up going to the west side. And I literally would have arguments and say, listen, it's just another zero. If you really think about it, it's the same deal. It's the same formula. It's just another zero. If you're buying a house at 60 cents on the dollar, it doesn't matter if it's $1 million house, you're paying 600,000 for it, or if it's $100,000 house, you're paying 60,000 for. But the profit obviously is significantly different. But the work and the strategy behind getting into that deal was essentially the same. So my mentality is go for it. I'm not really focused on the cost, if you would, as much as I am just the formula and the strategy.
I like that. Finding deals, you can do that in any market, repeating the same strategies. But funding wise, for those that are in a more expensive market where maybe it might take a little, say if they're using hard money, and obviously 15 or 20% of $1 million is much different than 100,000. What are some ways where people can connect with the individuals that will partner with them? Because most people, especially people that are starting off, it's I can't find any deals and I don't have the money. Now it's easier for us to participate in a $30,000 deal where 3 people have to raise $10,000, say. But what would you say for somebody who's starting off to find that network of people that are willing to partner with them to take down the bigger deals that might need $100,000, $200,000, $300,000 as a down payment?
I never looked at it that way, and maybe it was just blind ignorance or just me being naive. I have always believed that the deal is king. If you've got the deal, you've got to beg me to let you in my deal. So if it's a more expensive market, remember I focus on buying property below market. So if it's a house that's worth, let's say for the sake of argument, it's worth $500,000, and I've convinced the seller to sell me that house for 60 or 70 cents on the dollar, okay, and I'm going to be paying 60 cents or 70 cents on the dollar, I'm going to have someone begging me to fund that deal, because the logic is this: a hard money lender, if their money is in the bank, it's making zero. If their money is in a real estate investment and they're protected by 30 to 40% equity, they've got no downside, and they're able to make 7, 8, 9% interest, that's a significant return. And so I think that if I would tell your viewers and give you any advice or give anyone advice, is number one, know your worth. Number two, know the value of what you're bringing to the table, and know that you are giving an opportunity to them, allowing them to be your lender more so than they're giving you an opportunity. Because not everyone can produce a deal for 60, 70 cents on the dollar.
Right.
But there's a bunch of people that's got a couple of 100,000 laying around that they would love for it to grow.
Right. Do you mainly work with, for example, so taking out that hard money loan, which agreed, asset-based lending, they need the deal, and that's the only way that they make money. So bringing that deal to an individual, and they say, okay, the numbers look good. We need you to do, $100,000 down payment. Even though we need to do $100,000 down payment. If I'm somebody that's new, two things. One, am I going to look to maybe secure a loan for the $100,000, maybe like a bridge loan or something of that, or would you?
Who's saying that you need the down payment? The investor?
If I'm using a hard money, now obviously there's some deals where you might not have to worry about a down payment, but for most hard money lenders, they might require 10, 15, 20%, especially based off of your experience as well.
Right, based off of my experience. From my experience, if the deal is juicy enough, you literally can buy it to where the investor covers the entire purchase price. But I understand what you're saying. You're saying for someone that's not as seasoned and they may not have a track record, so the investor wants them to have some skin in the game.
Exactly.
So in that, So in that scenario, they need to buy within their means. They definitely need to buy within their means. If they're required to have skin in the game and they don't have the skin, then they're buying outside of their means, and so that's dangerous in and of itself.
Gotcha.
But you see, if the deal is juicy enough, the money finds you. So I've never had a problem finding the money because the deal is the king.
Right.
But if your deal is that tight to where a person isn't comfortable, like, for example, let's say you brought me a deal and you said, look, Barry, I've got this deal backwards and forwards, no matter what. This thing is worth $100,000. And I need you to fund 60. That's how much I'm paying is 60,000. Now, if it's really, truly worth 100, there's no downside for me.
Right.
I mean, I hate to say it. The lender almost wants you to default. They want to put that 60,000 in there so fast and hope that you don't do what you promised to do, because then they get the property for 60,000.
Right.
Now, if I don't trust your numbers or if I don't trust your experience, then I might say, I need you to come in with 20 or 30% of this. And in that case, then you should be able to perform, or just do enough deals until you save up the money, which is advisable as well. Do small deals until you save up enough money to where you can come in with the deposit if you have to, or take down the entire deal yourself if you have to.
Gotcha. As far as nowadays, is your business, tailored towards a particular strategy? Do you like flipping over buying hold, or vice versa? Do you have a particular strategy that you specialize in?
I specialize in all strategies. I buy, I fix up, and I sell, but I also buy and I fix up and I rent. I think it's very important that you have a portfolio of rental property so that you can also have passive income, especially if these markets turn on you. You want to have consistent income coming in. And then I also buy and I sell so that I can continue to have capital, so that when deals do present themselves, I'm in a financial position to take advantage of them.
First off, awesome response, because yes, just as a real estate investor, the strategy is just the exit strategy. Whether you choose to sell, whether you choose to refi out and hold it as a rental, whatever case, that's an exit strategy. But your job as the investor is to, find that deal. Like, that is your 10% revenue generating activity. What and I read your book, and I won't say it for everybody, but what are some of your favorite strategies for finding deals?
I'm old school as far as finding deals. Today, we have social media. You've got ads that you can run. I do all of those things. I do my social media advertising and things like that. But the truth of the matter is, a lot of the best deals, they still come, and I'm going to sound so old school to your listeners, but they really do come via word of mouth, direct mail marketing, and old-fashioned door knocking, because you're going right to the source.
Right.
Now, that doesn't say that social media doesn't work and the advertising in the Facebook ads and things like that don't work either. But I do find that word of mouth and that face-to-face contact with the potential seller, you can never go wrong with that. They're able to feel your energy. They're able to feel your sincerity. And if they're in a position that they want to sell and you're the person that's in their face, you've just given yourself a 90% advantage over, something that they might hear in the airwaves.
Those are, to date, still my two best sources: Spirit Influence referrals and direct mail. Those are and Spirit Influence more so over, when I think about just profit wise, referral based business has even been more profitable than the direct mail. So I definitely understand that. You're also buying apartments, small multifamilies, 2, 3, 4 families, and then you're also doing larger scale projects. Kind of talk about that, and how did you make the transition from residential into commercial?
The transition, it just evolved for me naturally. Again, it's the same logic. I use the same formula to buy a 4-unit building as I do a 44-unit building. It's just the numbers. If the numbers pencil out and it makes sense and that 4-unit building can support itself, it's the same formula that I use for that 44-unit building. If it can support itself and if it can debt service, then it's going to be a buy. So it's the same, but again, it's just this one may be a few more zeros. And I happen to dwell. I'm sorry. Go ahead.
No. Go finish.
No, I happen to dwell in both arenas. I buy the smaller buildings, and I also buy the larger buildings.
Okay, I was gonna ask: are you doing multifamily or like multifamily commercial or like strip mall retail center?
Multifamily commercial. At this moment, as far as strip malls are concerned, I prefer to focus on residential because my attitude is that people are always going to need a roof over their head.
Right.
And as far as technology is concerned, people are working out of their cars these days. So I'm not opposed to strip malls and things like that, but my main focus is residential.
You talk a lot about like the strategy that you use to find deals, funding deals, locating apartments, things like that. You talk a lot about it in the book, which it was awesome to see just the experience. And it's not an extremely long read. It's effective. It's simple. It's straight to the point. And then it's up to the reader to just do the action. Talk to us about the book.
Right. Well, this book, I've been wanting to write a book, and I'm not retired, so I'm actively buying every day. So as you know, with the things that you have going on, it's kind of hard to find the time to do things. So when I wrote this book, I decided I'm just going to write it in the form of the questions that I get all the time, because every day I'm getting DMs, I'm getting questions, I'm getting emails.
Right.
So I wrote the book like I'm having a conversation with someone. And as you see, I talk kind of fast. So it's a short read. It's only 57 to 60 pages, but I'm literally telling you specifically what I do. There's no BS, there's no fluff. I'm getting right to the point. And I talk to you about foreclosures, notice of defaults, trustee sales. In the book, I explain, I even give you examples in the book of cards that I mail out, like literally flyers that I actually mail out to homeowners. So if someone is interested in learning how to actually get out there and get their boots on the ground and start looking for actual deals that they can buy with upside, 100%, this is a book that they should buy. It's called Real Estate Investing, and it's by myself, Barrington Malcolm, and it's available on Amazon in Kindle form and also in paperback.
Awesome.
And my goal is for anyone that aspires and any questions that they have, they can read through it and their questions will be answered before they ask it.
Beautiful, man. As we, before we kind of start our descent here and get into the core four, let's take a few pages out of the book. And let's just talk about a typical day in the life. What are you doing on a daily basis that helps you continue to be successful as a real estate investor?
It might sound a little off subject, but something that I do on a daily basis is I focus on my family and my why. As you know,
That's
I have
not
kids.
Off topic.
Okay. Well, my why is what keeps me going every day. It keeps me grounded, and it keeps me focused on moving forward and evolving and growing. Frankly, I could have retired several years ago and just relaxed on easy street, but my why is so strong that even if I wanted to, I couldn't. So I'm just constantly motivated to continue to produce, to continue to build, to continue to grow. My why are my babies. I've got grown kids that are older that I had from a previous relationship, and I'm in a new relationship now with younger kids. I literally have a 6-year-old and a 19-month-old, and when I look at them, and my older kids as well, when I look at them, it just makes me want to just produce. It's weird, I just want to produce for my kids, for my legacy, to have something to leave to them significant. I had a conversation with my older son the other day, and I was telling him, I don't want you to ever have to do what I did. I want you to be able to take over what I leave for you, and then I want you to do the same thing for your son. I want your son to not understand the hustle as we know it. I want your son to only know how to move pegs around. You know what I'm saying? Right. So that's the goal.
Awesome, man. Are you doing and it's so important, because if you start your day off with that, it's game changing on your state for you to be able to then and go perform, because we're in a business where you have to perform, and the only way for you to perform at your top-notch level is you have to do those certain things that get you grounded and get you connected subconsciously to exactly everything that you're looking to attract in life. And starting your day off like that is so powerful. From there, I'm assuming that for the most part of the day, you're just looking for deals and managing ongoing projects.
Right. Deals are an important factor, and like you said, managing ongoing project. Like as we speak, I've got projects that are in the works right now that are in various stages of being remodeled. They're going to be coming to market either as rentals or to be resold. And while I'm in those stages, I also constantly have circumstances going where new deals are being looked at to be bought as well.
Right. Really quickly, as we get into our core four. So I have the awesome goal of eventually owning enough multifamilies where one of those things or two of those things out of the entire portfolio, not, a very small, 1% of or 0.5% of the portfolio can pay for it, but I will get a Ferrari. I will get a Ferrari, and yours is very, very nice, and I will have to match you on that one.
Thank you.
I'm pretty sure. You know what? Was that like a visualization goal? Was that like a vision board goal? Was that like a childhood goal? What was that?
Man, I've always liked cars, and Ferraris, I've had more than one, and the one that I have now, to answer your question, is it a vision board goal? I would probably say yes and no. It's the byproduct of my larger goals, if you would.
Right.
It's the byproduct. So my vision board goal is always to have assets that pay my lifestyle.
Right.
So my assets pay for my house, my toys, my livelihood, and things like that. So yes, it's a goal, but it's not the goal, if you would.
Right. Completely understand, man. No, it just looks nice. I'd rather, why not? If it obviously is not going to be anything that kills, and like you said, as long as the assets cover the liabilities.
Right,
man, that was just one of the things that I saw, which is awesome. Cool. Heading into the core four. Before that, did we miss anything? Was there anything else that you just want to kind of let listeners to know, at least about, about the game, about getting into it, about, the lifestyle change? Anything you wanted to add?
Well, what I would add is real estate is a long-term play. It's not a short-term hustle, and it pays rewards that you can't even imagine. So I would say to your listeners, if they're interested, if they even have the smallest interest in real estate, I'm sorry, if they have the smallest interest in real estate, they should pursue it. But I would like them to pursue it with a long-term mentality, not a fad, because it really is a life changer. It changed my life. I came from very humble beginnings, a single parent with 3 kids, and I don't want to bore you with the details, but it wasn't pretty. And I'll tell you that real estate can put you in a position to where not only are you good, but your loved ones, your heirs, and your descendants will be good as well if you attack it with the seriousness that it deserves. And it's a long-term play, not a short-term play.
Beautiful, man. Core 4, which are the 4 questions that I ask each and every guest that comes on to the Austin Smith Real Estate Podcast. Question number 1, which you might have just answered it, but question number 1, favorite aspect about real estate?
The security and the freedom that it offers. That's my favorite aspect. And the fact that you can buy a property today and that property can pay for itself and benefit you tomorrow. Not too many things do that.
Totally agree. Which is why I don't mind stocks. I have my money in stocks, but I find it extremely challenging on the debate of real estate versus stocks when our president, well, not my president, but the individual that happens to be in charge at this current point, if he says something stupid, which is often, my portfolio loses money. And I don't like that. Right. At all. Like, he could say something stupid all day, but my rental income is the same. You know what I mean? Like, and I can actually increase it. Like, that's my only thing.
Right. Agreed. Well, you know what? Regardless of who's in power, whether it's to go to your point, but regardless of who's in power, what they say, what they don't say,
right?
A stock, even if everything is going great, a stock can appreciate in value. Okay, and the dividend that it pays is minutia compared to the dividend that real estate pays. Right. That's also appreciating in value. You know, a stock isn't able to pay you $1,000 a month.
Right.
You know, like real estate can, and appreciate at the same time. So, yeah, I agree with you. I have stocks as well just because I'm a prudent investor, but being able to compare the both, real estate for me by far is the biggest win.
You ain't lying, man. Question number 2, what is your favorite business or personal development book? And of course, you can't select your own.
You know, I would say, now this I can answer something that had a significant change for me. The book is How to Win Friends and Influence People. That is probably the most significant book. Yeah, that's probably the most significant book to me, that book right there, because back in the day I grew up in the hood and I had hood mentality. And luckily for me, I read that book and it softened me and it taught me how to deal with people. And literally the title says it, How to Win Friends and Influence People. I would advise everyone that you know to read that book.
The biggest takeaway that I got, that biggest aha that I got from that book was the part where they talked about how they did a survey on phone conversations and the most repeated word was I. So
wow.
It just goes to show that obviously everybody's, talking about themselves and just what it does for a relationship when you ask the person more about themselves than you talking about yourself. And it's game changing. That was one of the biggest takeaways that I got from that book. Awesome book. Okay. Yeah. Question number 3. When you're not out putting deals together, riding in the Ferrari, what are some of the fun things that you like to do in your spare time?
The fun things that I like to do in my spare time, Man, you know what? Doing deals are my fun thing.
I love it.
As weird as that sounds, I love doing deals. That's my turn on. That's my fun. And that's as a business level. But other than that, my fun things is just, I guess, watching my kids grow, mentally, physically, spiritually. But as far as a physical fun thing, it's literally just doing deals and remodeling these properties.
Awesome, man. Last but not least, where can people find you at, Barry?
On social media, I am at Barry the Buyer. That's my on all social media platforms, or just look up Barrington Malcolm, and I'm easy to find.
Awesome, man. Barry, definitely wanted to take the time to thank you. The next time I'm out in California, I'll be sure to drop you a line. And the
Oh,
cool
for
part,
sure, for sure.
yeah, the cool part about it is that people get some action, like some actionable items, and it's just some things that they can just go ahead and implement right away. To start the course, like you said, it's a long-term game, but it's the consistent day in and day out, remembering your why that gets you to that next level. And to your point, it is game changing. I've seen how I've only got a small taste. Now, you've been in the business a lot longer than I have, and I've only gotten a small taste of what it can do, and just that alone is eye-opening. So, yes, for anybody that is starting to get on the grind or starting to enter the sport, just stay down, keep the grind going, you know what I'm saying? Learn, implement, take action, and maybe you'll be like Barry one day.
Hey, and I'll tell you, the most important thing that you said is the most important part of that is actually pulling the trigger.
Yes.
Some people let themselves become professional tire kickers and they don't realize it. They never pull the trigger. Pull the trigger. You can't go wrong.
Paralysis.
Yes.
It's a lot easy to happen. Barry, man, I know you're on the West Coast. I know you're 3 hours behind, and I know this is probably the most important part of the day. I thank you for taking the call so early, and thank you for coming on the show, brother. I mean, obviously, we'll stay connected online, and we'll keep this thing moving, brother.
Yes, thank you. I appreciate you, and good luck with your podcast and all your future real estate endeavors.
You too, brother. Thank you for taking the time.
All righty. Have a good one.
You too.
Okay. Bye-bye.